All right, hey guys, welcome to another week of daily trading live streams. Today's going to be pretty short and sweet. We're going to go through some volatility trade scans, and then after analyzing the stock I found, we're going to go through some earning stuff and some forward vol stuff, and then the community in the Discord is going to go over their own trades if they have any. So let's get right into it. So today I was looking at TSM. It's the Taiwan Semiconductor Manufacturing Company or something like that. They make like semiconductor chips for like AMD, and probably a bunch of other companies that I don't know about. But let's just zoom in on the key metrics here. So looking at the key metrics, we can see the implied volatility is 2736, but the forecast is only 2259 down here. So that's telling me, hey, maybe options are a little expensive here. We can kind of look at the historical data first to look at sorry, let me go back. So we see this might be an opportunity. So we're gonna try to price the vol. And the first thing we're gonna do to price the vol is to look at the historical data. So looking at the vol earnings graph here, we can see that there's historically been a pretty decent premium. Sometimes, the blue line, the realized vol line pops up, but that's probably just earnings or something like that. Most of the time, the green line implied vol is above the blue line, realized vol. In the last couple months here, just zooming in even more on since March, we can see that there's been a pretty fat premium. It's closed a little bit in recent days, but it's still there. This is telling us that like maybe variance risk premium is pretty high here. Let me just write down some numbers in my notepad though, because I'll forget later. We're just gonna write down the implied vol is 2736. And we want our forecast to, ideally be lower than that so that we have a good trade. First thing to note down is the PA forecast of 2259. That's the terminal's estimate of what future vol is going to be. The terminal does that by combining a blend of IVs and RVs to get a estimate. So we're going to write down 2259. We're also going to note down that here historical vol is 25. 25? Yeah, 25. So we're going to write that down as another estimate as well, because generally speaking, historical vol is a pretty good indicator of what future vol is going to be like, because volatility clusters and without any weird event happening, there's no reason for the stock to suddenly start moving a ton. Another thing we can use is the implied volatility as a estimate. So IV is the market's estimate of future volatility, right? But we want to take out the variance risk premium first because sellers generally demand a bigger return for selling options because it sucks. You'll blow up every now and then, and nobody actually wants to do that for free. So hopping over to the relative value tab, we can chart out the implied vol ratio here. We can see that, sometimes it's below 1, but for the most part, IV does outpace RV. And yeah, it's just typically above 1 for the most part. Right now, the spread is at a 1.09. If you look at the key metrics, though, we can see the average spread, which in this case seems to be about 1.06. So we're not too far off from like the average. So there's not any like crazy move being priced in here, but there's still quite a nice premium we can sell. What we can note down then is what is implied volatility minus the historical risk premium, which is 1.06. We can just calculate that using the calculator. So our implied vol of 2736, we can just divide that by 1.06 to get our average, average forecast of volatility without the premium. 1.062. So if the variance risk premium is at its average and implied vol is 27, we should see our realized vol be around 2576 or so. So we're just going to write that down as our last estimate. And that's all we have for historical data. So we're gonna move on to some relative valuation. What we're gonna do is we're gonna look at a correlated stock and see if their implied vol looks the same or not. Hopping over to the correlation tab, we can see that ASML here is about 70% correlated, which is pretty decent considering they're both like semiconductors and they're in the same like industry. It makes sense for them to be correlated. We can see the rolling average. is it's been falling, but it's still above 60%, so it's good enough. We can kind of compare the IV RV ratios of these two stocks and see if there's any sort of outliers and kind of identify if there's a mispricing anywhere. Back to the relative value tab here, we can plot ASML, the ratio anyway, and see what that looks like. We can see that the IV-RV ratios are pretty similar across the board. And even though there's like a bit of a spread sometime in September, sometime in February, this is probably just earnings or whatever, right? If we focus since on March and onwards, we can see that the spread doesn't really spread all that much. It's pretty much the same. And today is no different. So we've got our 1.09 and our 1.08 for TSMC and ASML respectively. So this is telling us that we're not really seeing any like company specific mispricing. It just seems like there's a pretty big premium across the board. So we can kind of just ignore relative valuation for now because it seems like everything's kind of priced right and we're just more or less selling at a risk premium. So I'm going to go ahead and actually just remove that from the notepad for today. If there was a mispricing though, I'd have to, obviously go into more analysis. But looks like our historical data is just probably going to do. If you go in the news and you see like TSM has some sort of like weird event in the future though, like obviously that's something to watch out for, but a quick look at Wall Street Journal tells me there's not too much going on. All right, now that we have our three estimates, the PA forecast, the implied vol without the premium, and our historical vol, we can kind of get an average forecast by just, averaging the three. So I'm just gonna pop that in the calculator here, 2259 plus 27, no, 2576 plus 25. We get 73, you divide that by 3 to get our average of 2445. So I'm just gonna pop that in here. Our average forecast with an O is 2445. Well, that's pretty good considering our implied vol is like 27. So we've got what, a 3-point drop that we're expecting. So implied vol is overpriced by about 3 points. That's probably gonna look really good actually. So let's price out the straddle and see what that actually looks like. Before we do that though, I need to figure out what price this is. TSM is 91.59 right now, so we're just gonna pop in the calculator 91.59. What strike are we gonna sell? We're probably gonna sell the 91. Let me just quickly open Thinkorswim to see what's available. For the Junes, it looks like there is 91, so let's do that. Or should we do the 92? Let's do the 92 because it's a tiny, tiny bit closer. We got the 92. Expiration of June 16. The third Friday of every month is the monthly after all, so we're gonna do that. It's got the most liquidity for the most part. I don't really want to play with the weeklies unless I have to because the spreads are so damn wide. Yeah, looking at the risk metrics here, we can see the straddle is supposed to be 525. So I'm gonna note that down. But I'm also gonna check Thinkorswim to see if that's actually the price we're getting. And are we? We sell the straddle. And it looks like the mid is 535. Obviously, there's going to be a little bit of variance because we're using different models and whatnot. But as long as it's within the ballpark and it's not like $8 or something, we know we've probably done it right. So that's a market price for the straddle 525. But if we drop it to 2445, we can see what the straddle's actually supposed to be worth. So we type 2445 in the calculator and we get 469. Nice. So if our straddle's actually supposed to be worth 469, we can kind of calculate how big our edge is. We take 525 and you subtract, the fair value, and it looks like the straddle's overpriced by about $55 or so. That's nice. And I screwed up Twitch. Hang on. There we go. $55. So that's all well and good, but obviously we need to know what our margin is on the trade itself, because if we sell the straddle, we're gonna probably have to put up a ton of margin. I forgot to check that before the stream, so I'm gonna have to turn off this Twitch stream for a second and check on my actual brokerage. The paper trading on Thinkorswim has portfolio margin, so it's not accurate. I'm gonna figure that out in a second. All right. Twitch is off for half a second. I'm gonna pull this open and I'm gonna look at the profile, which tells me that the margin is about $5,000 after delta hedging. So Twitch can come back. We're gonna note that our margin's about 5K, and I've done the wrong button. Hang on. There we go. So the margin is $5,000. You can kind of eyeball it, right? 55, you divide by 5,000. Yeah, you can see the return on margin. I cannot eyeball stuff because I have not woken up yet. So I'm gonna open my calculator, and this is gonna make me look really dumb, but I'm gonna divide 55 by about 5K, and we're seeing about a 1%-ish return on margin in a month. That's not so bad, you know. With compounding as well, you're gonna hit more than like 12. And shit. Yeah, that's that. So this trade is okay. It's just selling the variance risk premium. You're gonna get a decent return on margin, and there's not too much to talk about other than that. But before we move on, though, let's stress the trade itself so that we can be sure that we can handle it. So I've got the straddle here. I'm gonna sell one because I'm not crazy, and we're gonna analyze this trade. What we're gonna do is we're gonna, let's see here. We're gonna stress this straddle to like a big move in either direction, but first I want to see how big it has moved historically. So looking at the price chart on the left here, we can see that like the stock actually does kind of move a lot, like every now and then. This is probably earnings or something like that, so we're not gonna see this every day, but let's say it goes from 60 to like $80 in like 18 days. Well, we're not gonna see that much of a move in one day, but maybe we'll see like from 14 to like 16, went from like 72 to 80. So let's stress it to like, I don't know, a $15 move or something ridiculous and see what that looks like. So if the stock is 92 right now, we can stress it to like 117 and I guess 75. 75, is that right? 77 or something like that? Yeah, let's do something like that. This is like the worst case scenario, and you're not obviously gonna see this like realistically, but if you're in the hospital and you can't manage your trades, it feels good knowing that like, you'll still be safe. And it looks like if it falls to 77, you're out like $1,000. That's rough, obviously, but wow, it's actually pretty bad out here. It's like $2,000. Did I do the math wrong? 91 minus 15. Okay, so it is about right, but I think that's because our strike price is like a little tilted from like the actual spot price. So, or did I do something wrong? No, I definitely did something wrong. Why is it 117? I'm an idiot. Okay. I guess I still can't do math. 91 plus 15 is 182. It is not 117. Wait, what? Hang on. I definitely got something wrong. Yeah, you can see the autopilot is like pretty real. 91 plus 15 is 106. That looks better. That looks better. Yeah. I have no idea how I didn't catch that. But yeah, it's looking at like a $1,000 loss on both sides. But that's if like the stock moves like 20%, that's not gonna happen for the most part. This is like the worst case scenario. For the most part, you'll make your $50 and get out. And honestly though, like if the stock actually does move this much, it's probably gonna be because like earnings or something like that, which you should have closed the trade beforehand. Or like China invades Taiwan, in which case you probably should be thinking about like growing your own food and stuff and not really your stocks. So yeah, if your risk tolerance is like, $800 more, this is probably a good trade for you, even though it's got like a pretty bad left tail. Or is it right tail? Well, when it gets bad, it can get bad, but for the most part, you're gonna make your $50 and get out, right? So yeah, that's your daily vol trade of the day, and we can move on to some earnings stuff. Popping up the earnings insights. Let's see what we find today. Um, I want to change some tabs here because I kind of like seeing the sectors and stuff. And I guess we don't need our notepad anymore, so I can just stretch this up a little more. There we go. Yep. Okay. Let's filter out for some volume Let's trade stocks that are 20 bucks or more. Let's look at confirmed earnings, and which, it does seem like all of them are. Let's ignore the mergers and acquisitions and stuff. We've got two. We've got two today. So we've got Lowe's, which is like, I think it's like an American hardware company or something. We don't have that in Canada, I'm pretty sure. So not super sure if that's any like special company or just your generic Walmart kind of home hardware thing. You got Zoom. Everybody knows what Zoom is. It's not really that hard to explain. But let's look at Zoom first, because it's got a pretty big implied earnings move. It's got an implied earnings move of 10%, but it's also realizing about 10% or 11% on average. So if you're selling this stuff, you're not really making a ton of money. You can see the strategy backtest is like positive. Kind of lame, I guess. Um, I guess for this quarter, the earnings have been pretty chill in general. Just Q2 doesn't really see a lot of moves, but that's like 2, 3 data points. I'm not super sure I'd rely on that. Maybe I skip this one just based on the historical backtest alone, but it's $69, so yay. Let's move on to Lowe's. It's a $200 stock, so if your account is small, you probably don't want to trade this. And it looks like there was a big blowout in some quarter of 2019, and it's been somewhat profitable to sell straddle since then. It's okay. You've got your implied earnings move and your average realized move is kind of the same though. So I'm not super happy about this one either. Yeah, I'm not gonna lie, I'm probably not gonna take any earnings trades today. But if I had to, maybe Zoom, I guess. No, I actually straight up wouldn't trade any of these. But let's analyze like our P&L just for practice, shall we? We open up Thinkorswim here for like, let's say Lowe's is really expensive. Let's do Zoom. I'm not gonna recommend this, but we can do it for practice. We're gonna do Zoom. We're gonna sell the weeklies because we want as much exposure to the earnings date as the earnings event as possible. Let's just sell the straddle, not the strangle, the straddle. We're gonna sell one of them, makes life a little easier, and then we will analyze this trade. So what did the numbers in the terminal tell us? We've got an expected IV crush of 43%. That's a ton. But then on at like the maximum realized move is at 40%. So we're gonna have to stress this pretty heavily. Just plugging in some numbers here on Thinkorswim. If we drop the vol by 40% by tomorrow, you will have made $250 per straddle if the stock doesn't move at all. But obviously that's not realistic. The stock is gonna move. If we stress it to 50% moves, let's see how that looks. So plus 50 on one side, minus 50 on the other side. We're gonna have to zoom out on this one because 50% is really, really far. We're looking at like 106 and like 35. I'm gonna zoom out a little more. All right, so if the stock moves 50%, you're out like $2,000, $3,000. Yeah, I don't like it at all. Zoom, I don't like it at all. I'm not gonna trade this, but you know how to stress a position. Just gotta practice it in Thinkorswim. So that's what we did, and yeah, that's all we're gonna do. We're not gonna trade that at all. Moving on to forward vol, let's take a look to see if there's anything interesting today. We're looking at $20 stocks. We're looking at stocks with enough volume, no events. I forgot to change the column, so I'm gonna have to do that again. But luckily, we're not gonna have to do that in the future because we're gonna have like presets and stuff in the next update. So $20 stocks, good option volume, weeklies but no earnings, and then we can look at the forward factor. Um, no mergers and acquisitions either. First thing I'm gonna do is I'm gonna ignore the healthcare stocks because those are probably just FDA approvals and I don't want to trade those. And then we've got DLR and EWC. So I'm just gonna pop open my broker here and see if anything's tradable. EWC first. If we want to trade the 3060, we are selling 19% vol and you're buying 18% vol. This is not good. I'm not gonna like open a trade for one Vega, especially on a calendar where like commissions are pretty high. So probably not going to do this one as well. 23% forward factor is mostly high enough for liquid stocks, but I guess for this one it's just kind of meh. Let's look at DLR and see if there is one calendar trade we can put on. So for selling the June and buying the July, you're selling at 44 and you're buying at 43. If your edge is like 1% involved, it's probably no good. So I guess we're not going to do a whole lot of forward vol trades today either. So I guess that wraps up today's stream. I'm gonna be in the Discord after this to talk with the community if they have any more trade ideas, but that's all Twitch gets to see. So yeah, thanks Twitch. I'll see you guys tomorrow.